Malaysia's industrial property market is entering one of its strongest growth cycles, driven by surging investments in data centres, e-commerce logistics and E&E manufacturing. In 2024, industrial property transaction values jumped 22% year-on-year in the third quarter to 7.2 billion ringgit, signalling rising investor interest. Malaysia has also secured more than 57 billion ringgit in data centre investments, with a total pipeline valued at 149 billion ringgit, underscoring its accelerating role in regional digital infrastructure. Looking ahead to 2026, industrial assets are expected to remain the standout reformer, fueled by digitalization and increasing AI-related infrastructure needs. At the same time, key hubs such as Kuala Lumpur, Penang and Johor continue to record firm rental growth and rising industrial land values, driven by strong interest from MNCs, logistics operators and global tech companies. And Penang remains a major E&E manufacturing centre, while Johor has rapidly emerged as a significant data centre cluster linked to Singapore's expanding digital ecosystem. And this momentum, however, raises new questions. Can incoming supply keep pace with demand? And how sustainable is tenant quality? And what risks could reshape Malaysia's industrial narrative beyond 2026? So to answer these questions, we have Siva Shanker, Director Real Estate Agency, Rahim & Co. Chesterton on the line. Good morning, Siva. How are you?
Good morning. Hi. Thank you very much. Happy to be here.
Thank you for being here with me on Niaga AWANI. First question I would like to know is what we're seeing in the industrial market a post-pandemic rebound or actually a structural repositioning of Malaysia within regional supply chains, and what data convinces you either way?
Okay. So this is no sudden surge. What we are seeing is very slow and steady growth that has been held very steady over the last 10 years. Even in the 5 years before COVID, when all the other sectors of the property market was on a decline, you must remember that 2015, 2016, 2017, 2018, we've seen the property market declining. But in all those years, the industrial market held very firm and very steady. And yes, there was a bit of a dip during the COVID years, but it recovered very quickly in 2022 and has been moving ahead right up to even last year in 2025. The industrial market still recorded a positive.
When we break down the demand that we see today, in your opinion, Siva, which segment is generally leading? Is it the e-commerce and third-party logistics? Is it the data centers or E&E manufacturing, or perhaps the multinational relocation activity? What are your opinion on that?
Okay, so I think it's a bit of everything. You've asked a very important question. I think it's a bit of everything. Of course, immediately after COVID, what was very apparent was the surge in e-commerce, warehousing. So the big part of the market, of the industrial market, was really warehousing. People needed somewhere to store their goods. So because of the surge in e-commerce, so that took a big leap ahead. But in the last couple of years, we've seen the data center boom all of a sudden come into Malaysia and take a big portion of the industrial market. And then that's mainly due to the fact that Singapore imposed a moratorium on data centers, and so the data centers came into Malaysia. Of course, I think Singapore now has reversed their decision, but maybe a bit too late now, because that the play into the Malaysian market has come in. We are able to offer cheaper land, cheaper materials, cheaper workmanship, cheaper labor as compared to Singapore. So data centers have led the way forward. And I think in the last few years, the government has made all the right noises and has been marketing Malaysia as a business-friendly environment. The slogan, the mantra, of course, is Malaysia is open for business. Come and invest in Malaysia. We are a friendly nation. We will make things easy for you, and I think that's led a bit of a growth as well. So it's a combination of all three.
As what you were saying, which actually of these demand drivers has the strongest staying power over the next 3 to 5 years? What's your outlook?
Now, in my opinion, I think if we want the industrial market to hold steady and keep going forward, the bread and butter will be the FDI. We must go back to basics. We must be able to build factories that are producing something. So the idea should be that I buy goods. I buy many different types of goods. I assemble and I sell something and make a profit in doing so. And that, I think, is the most fundamental of all industrial activities. The data center and the warehousing, I think that could be a bit of a lifespan. The surge could go down. And if the surge does go down, then we will see supply overtaking demand. But if we can continue investments into manufacturing, that I think is the sustainable one.
That's on the figures. We've seen firm rental growth and also rising industrial land values, particularly in Klang Valley, Penang, and also Johor. Realistically, are we beginning to see rental resistance from occupiers? And at what point do rising land and also development costs start compressing yields and also affecting Malaysia's competitiveness as a whole?
So here's the thing. I think yields have already started to get a little bit compressed. These are sometimes things that we don't want to see or don't want to accept. But as values go up and if rents don't follow, then the yield compresses. So there is a bit of a resistance to rental increases, although rents have increased. I'm not saying it hasn't. It has increased, but I think it hasn't increased to keep in line with capital value increases. So in the last few years, we have seen yields drop a little bit.
I've mentioned earlier about the Malaysia's industrial property market entering one of its strongest growth cycles. But strong performance always or often tracks aggressive supply. So what does the incoming industrial pipeline look like over the next perhaps 24 to 36 months? Are we at risk of oversupply, particularly in logistic parks or speculative developments, Siva?
You're asking me all the difficult questions. It is a double-edged sword. Yeah, you must understand that a success in any sector of the market will bring demand into that sector. Will bring supply into that sector. So it's like a double-edged sword. And if we are not careful, if we don't weigh supply and demand carefully, then we might have a situation of supply overtaking demand. See, right now, I think the industrial market is as close to equilibrium as it can be. There is never a perfect market, so we will never see perfect equilibrium of supply and demand. But if they're close enough, then I think we are already on a steady footing. But if the industrial market continues its current successful run, and if more players enter into the market with more incoming supply, then I think it stands to reason that if demand cannot keep up, then we might see a slight oversupply situation. Yes, so we have to be careful of that.
But absorption is one thing. I want to know, how strong is tenant quality? Are landlords securing long-term leases from multinational corporates, or are we seeing shorter commitments? And is there now a widening performance gap between high-spec, ESG compliant facilities and also older industrial stock? What are your thoughts?
Okay, I think tenant retention has held very steady. My opinion is industrial tenants are very steady and very strong. All the industrial players have been reporting very good results. all the REITs, the developers who've gone into industrial, the asset managers who've gone into industrial, they've all reported very good results. So tenants have held steady. Even the SST, they have very comfortably absorbed the SST. Of course, there was a bit of a hesitation, but the markets absorbed it, so that's going very well. They are signing long leases. The industrial leases are the most steady ones because they're very long, and there is a built-in increase in rent every few years. So your yield keeps getting better and better and better over time. So I think, industrial tenancies and leases are holding very steady.
Last one before we wrap up. Looking forward, if we look at 2026 and beyond, what is the single biggest risk to this industrial growth narrative, and what should investors and developers be most cautious about right now?
I think we should be a little bit cautious about overbuilding. I don't think the industrial market it's a bit inelastic, right? Demand doesn't increase overnight. You can't create demand where there isn't one. So growth has to be slow and steady, organic. And I think building needs to be tempered with where the demand is. So we should, if we build carefully, if we build to suit, or if we build according to demand, then I think the industrial market will continue to have legs to run for some years to go.
So what we can say now is Malaysia's industrial sector is powering through one of its strongest phases yet, but the real story lies in whether this momentum can be sustained. And the question now also is how well the market can balance expansion, quality and also long-term stability. So that was Siva Shanker, Director in Real Estate Agency, Rahim and Co. Chestertons. Thank you so much.